I'll be talking today about share repurchases, and that activity in the United States has really been increasing. Reports indicate that share repurchases by S&P 500 companies are on pace to hit $1 trillion this year. This trend has attracted a lot of attention, and in some quarters, criticism. At this point, buybacks have become a political issue. It's against this backdrop that the SEC issued two separate proposals that have the potential to impact and perhaps to some degree discourage share repurchases as a method of returning capital to shareholders. One proposal involves amending Rule 10b5-1, which provides an affirmative defense to a claim that a trade in a company's shares occurred on the basis of material non-public information. Companies don't have to use a Rule 10b5-1 trading plan to conduct their share repurchases, but the fact is that many do. The other SEC proposal is intended to modernize companies' share repurchase disclosure obligations, and it would dramatically accelerate timing of disclosure as well as increasing the level of disclosure. The Rule 10b5-1 proposal affects insiders as well as companies, but today I'm highlighting aspects of those proposed amendments that would create meaningful restrictions on company buybacks. In particular, the proposal would impose a 30-day minimum cooling off period for issuers between the time they adopt a Rule 10b5-1 plan and the first repurchase of their shares under that plan. Cancellation of a trade would constitute a modification of the Rule 10b5-1 trading plan, and that would restart the cooling off period. There's no de minimis exception. Another proposed provision would prohibit multiple overlapping plans for open market trades of the same class of securities. A centerpiece of the share repurchase disclosure proposal is new Form SR, which would have to be filed within 1 business day after each share buyback, providing details such as the number of shares purchased and the average price paid per share. This requirement would apply to issuers whose equity securities are registered under Section 12 of the Exchange Act, and that includes foreign private issuers and certain closed-end funds. If there are any material errors or changes to information previously reported on Form SR, the company would be obligated to file an amendment promptly. As proposed, Form SR would be furnished as opposed to filed, and that's helpful from a liability perspective. This proposal would also expand current quarterly share repurchase disclosures. Among other things, it would require a description of the objective or rationale for the buyback program, as well as a discussion of the process or criteria the company used to determine repurchase amounts. Taken together, the two proposals could change the way companies currently conduct their share repurchase programs. The comment period for both proposals has expired. A common theme for issuer-based comments on the proposed Rule 10b5-1 amendments is opposition to the 30-day cooling off period for companies that are repurchasing their own shares. The ABA comment letter argues that the cooling off period would reduce the effectiveness and efficiency of issuer share repurchase activity, and that would be directly detrimental to shareholders. Issuer-based comments on the share repurchase disclosure proposal have objected to the 1 business day disclosure timing arguing that it would impose significant administrative burdens on companies engaged in buybacks, both in terms of time and money, and that it wouldn't generate information useful to most investors. Also, if a company suddenly stops making daily repurchase disclosures after filing Form SRs regularly, that could be interpreted as a signal that the company has material non-public information, which in turn can create rumors which can lead to volatility in the company's stock price. And another downside that was identified is that daily reporting may enable sophisticated investors to front run or trade against the company. Some comments suggested that if the SEC retains the Form SR, the filing requirement should be changed from daily to monthly. And alternatives raised in the comments included reporting repurchases that aggregate 1% or more on a Form 8-K within 4 business days. There were also objections to some of the expanded disclosure, such as describing operational decision-making and treasury cash management strategies involved in the processes and criteria used to determine the amount of shares to be repurchased. The SEC now has to evaluate the comments it receives and determine whether to make any changes to either of these proposals before it adopts final rules. We'll be following both rulemakings closely and will prepare blog posts and legal updates as further developments occur in this area. So stay tuned. And to learn more, please visit our free Writings and Perspectives blog. Thank you.